Welcome to our discussion on understanding the tax implications of joint bank accounts for unmarried couples. We will explore how these arrangements affect tax filing and provide recommendations for managing your finances effectively. Here's what we'll cover in today's video. We'll start by discussing introductory concepts about tax filing and joint accounts, then move on to the specific tax implications. We'll conclude with some recommendations for unmarried couples and a necessary disclaimer regarding personal financial advice. Let's delve into the basics. It's common for unmarried couples to have a joint bank account for consolidated expenses like bills, while also keeping individual accounts. It's important to note that in the United States, your tax filing status is determined by your marital status rather than your banking arrangements. Thus, regardless of having shared accounts, unmarried individuals still need to file their taxes under the single category. Let's examine the tax implications of having a joint account. While your filing status remains single, financial institutions may issue tax forms like a 1099 INT for interest earned to just one individual, typically the primary account holder. However, this does not alter your obligation to report individual income, regardless of where it gets deposited. Here are the key points to remember. Keeping joint accounts will not affect unmarried individuals' tax filing status. Even if a form like 1099 INT is issued to one person, it is imperative for each individual to report their own income earnings. Now, let's go over some recommendations for unmarried couples managing joint accounts. It's generally advisable to maintain separate personal accounts for a clearer financial management and simplified tax reporting. Consulting a tax professional is always recommended for advice tailored to your specific financial situation. Here's a question to test your understanding. Why should unmarried couples maintain separate personal accounts along with a joint account? Is it to simplify tax reporting and manage expenses clearly because IRS requires it? Or to avoid joint responsibility of debts? You may pause the video now to think about the answer. We'll discuss the correct answer in the next section. If you said, to simplify tax reporting and manage expenses clearly, you're correct. By maintaining separate personal accounts, couples can have better clarity in managing their individual finances and simplify tax reporting, which is especially advantageous for larger transactions like investments and loans. Seeking the guidance of a tax professional can be highly beneficial when it comes to understanding the nuances of managing joint accounts and the implications for tax reporting. This professional advice will help ensure you are compliant with current tax laws and regulations, which can be complex. Let's wrap up. Unmarried individuals should file taxes as single whether or not they share joint accounts. A 1099 INT form, while it may be directed to one individual, plays a part in both parties' tax reports. It's recommended to maintain separate accounts for clarity and consult tax professionals for customized advice. That's a wrap on our video about joint accounts for unmarried couples and their tax implications. If you found this video insightful, please remember to like, share, and subscribe to our channel, and share your thoughts or questions in the comments below. We'd love to hear from you.